Welcome back. You're watching the final lap of Business Morning on Channels Television, and we're still taking a look at the housing sector. Closing words now from Mr. Femi Akintunde, he's the CEO of AM Facilities, and we're talking about development in the sector, particularly accessing the National Housing Fund, which is supposed to provide relatively cheap mortgage funds to Nigerians who are willing to take advantage of the potentials in the industry. And Mr. Akintunde has been talking about the numerous challenges, of course, that has come up with regards to this. And we're now going to be talking about solutions. Now, going forward, what should be happening? What should the FMBN be doing with regards encouraging more Nigerians to take out mortgages?
Okay, I think the number one thing is that we have to strengthen the financial base of FMBN. And that will happen in two ways. First is that the contributors to the scheme have to live up to their promises.
Yes,
and the
of
contributors,
about 70%.
Exactly, the contributors through the private sector, government matching the fund from the private sector, and also those who have taken the loans in the past must pay back. Yeah, we have to ensure that the money is recirculating. Then the FMBN also has to be empowered one way or the other to have some fund separate. Separate from the ones they're using to fund the project. They must also, which is at the discretionary rate of 6%, they must also be allowed to do some commercial lending. Yeah, have some funds aside for commercial lending, which enables them to have some money to support those who cannot afford the maintenance charges of those estates. Because right now, those estates are built, we do not have anything inserted in the clauses of the people who have acquired them to ensure if maintenance is sustained. The number two thing is that government has to find a way to support the developers so that they will encourage developers to come on board and participate in the scheme. If it works for them, they will also do something about it. And if we also look at the aspect of public accountability, we have to make all these institutions more publicly accountable. Okay, people want to know how their money is being spent. And what we're saying here is that on an annual basis, they must publish reports, like every other institution. How much have you collected? Who has brought in what? What is the number of people on the queue? How many people have you disbursed to? How many houses have you been able to build through this scheme? And when people see those data, when they see those statistics, there's a way it also stimulates interest and demand. More people will want to participate, and then the scheme will move forward. And then maintainability. We have to make sure that people are made responsible for the maintenance service charge to keep those estates going. If you don't do that, you build here today, it goes down, you build another one, then at the end of the day, you are just creating more slum in the urban city. I think that's a big problem.
Yes, I have to stop you here now because you see we're about to delve into another issue that is really prevalent in the housing sector, which is the fact that a lot of Nigerians do not have maintenance culture. So I'm going to have you back here on Center again for us to talk about maintenance culture, maintaining the houses that we already have so that they do not fall into slums, like you rightly pointed out. But thank you so much for coming on the program. It's been a pleasure speaking with you. Femi Akintunde is the Managing Director, CEO, Alpha Mead Facilities and Management Services Limited. Let's quickly talk about the commodities now. We've seen there's been, well, interesting times on the markets. Okpeyemi Oguntade, she's a research analyst with Economic Unit of Financial Derivatives Company. She joins me now via Skype. Good morning, Okpeyemi. It's great to have you on the program. Let's talk a little bit more about the numbers. We've seen oil prices continue to hover around the $60 per barrel range as of this morning, about $65.70 per barrel. Talk us through the numbers.
Well, the number of commodity index increased this week by 2.1%, and this was driven mainly by the increase in the energy commodity index. The reason why was because the Energy Information Agency released the report yesterday showing that U.S. crude inventories declined by 6.8 million barrels. So this prompted speculators to dive into the market and led to the rally in oil prices, which led to 4% increase in Brent and a 5% increase in WTI. For the agri commodities, We saw that grain prices declined this week. Actually, specifically for wheat, there was like a 3% decline overnight. And this was because of the reports released by the U.S. Department of Agriculture showing that the wheat production for the year is going to increase 202 million tons from their initial forecast of 200 tons. And for the soft commodities, we saw an increase in prices for cocoa and sugar. And this was mainly driven by the increase in demand for these products by confectionaries, given that summer season is coming soon and there will be an increase in demand for soft drinks and ice cream in this season.
Oh, yes, that's true. Summer is coming. And so a lot of ice cream and a lot of other fluffy stuff that make you put on weight. But okay, I mean, let's talk about how this is going to impact on the top and bottom line of companies. For instance, they use some of these products. Talking about sugar now, we're talking about Nestle, we're talking about Cadbury, we're talking about NBC, who use sugar as a predominant confectionery in or predominant condiment or ingredient in most of their products. How is this going to affect their profit?
Well, it's not necessarily going to affect their profit because the thing with these firms is that they can easily pass on the increase in the prices of their inputs to the consumers. So what we would expect them to do is to increase retail prices to cover up for this increase in costs. And so yes, we would expect them to increase the retail prices of their products, like say Milo and Cadbury and other products within the market.
Okay, so your expectations are going forward for what today is Thursday, for Friday,
Yes,
and most likely Monday. What are we going to be seeing at the hard and soft commodities market?
Sorry, repeat that question.
Today is Thursday, so what are we expecting to see, in the next coming days? Because Friday, we're not going to be speaking with you, and then we have Monday up until Tuesday before we get another update on how the markets we were looking at. What are your expectations?
Well, my expectation is that the commodities are going to maintain the same trend next week. For all prices, I expect all prices to continue to increase, and for the grains as wheat, rough rice, and corn, I expect their prices to continue to decline due to the oversupply in the market. And for the soft commodities, it's dependent on the weather conditions as well as the demand for the products. Specifically for cocoa, there were some reports on Monday telling us that there was flood in Ivory Coast, which is one of the major exporters of cocoa, and this has led them to reduce their forecast for production of cocoa from 570,000 to 500. So I expect cocoa prices to continue to increase in the short term. And for sugar prices, the sugar market still remains oversupplied from the Asian economies. So I expect even if there's going to be any increase in prices, to probably be very marginal, say between 0 to 2%. So yeah, that's what I expect to happen.
Well, Okwemi, thank you so much for sharing your perspectives with us on the program. Of course, we'll keep our eye on the number as well. But do have a profitable day.
Thank you.
Okwemi Oguntade is the research analyst with the economic unit of Financial Derivatives Company, talking to us about the commodities market and optimistic about how prices will be looking like going forward. I'm also optimistic about how the day is going to be like for me, and I hope for you. Do have a profitable trading day. I'm Harriet Agbini. Bye-bye.